Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. We'll start with the euro against the dollar. A key reversal down yesterday. Not the hardest of things to accomplish, considering the previous two sessions were indecisive doji crosses. However, I'm going to voice this now rather than label it on the daily chart. But yesterday could also be seen as a large indecisive spinning top, if seen in a certain way. I'm not saying it is, but it could be interpreted as such, especially after, as I've already mentioned, two earlier consecutive indecisive doji crosses. Anyway, it still seems the market is unsure about trying beyond the overhead flatlining medium moving average, currently at 120.54, and also moving down to test the recent 50% Fibonacci line at 119.75 and the flatlining short medium moving average just below, currently at 119.66. So far today, of all things, what looks like right now is it might be an immediate countering bullish engulfing pattern. Of all things. Maybe the indecision has started to take on an intraday dimension rather than just intraday. As I've said the last 3 days, caution, this market is still trying to make up its mind. Cable, aka sterling against the US dollar. A key reversal down yesterday, but only just. And what's more, a seeming faulty one as well. Why faulty, you say? Well, the previous session was an indecisive spinning top, and it takes a little effort not to make a clean key reversal down in such a situation. Nevertheless, prices dropped down through the gently rising short medium moving average, currently at 138.69, but was halted, interestingly, by the short moving average that was just below, currently at 138.21. Overall, we're still well within the June to September 2020 bullish shift pitchfork, with the lower time below currently at 137.12 and the middle time above currently 141.72. Please remember, this pitchfork has given the bullish angle of attack of this market since September of last year. Now, one final point, the lower time continues to be partnered with the rising medium moving average currently at 137.36, which has also been an effective barrier these recent weeks. So far today, I pull back up through the lightweight short medium moving average. Seems the short moving average is more potent than the short medium moving average as support right now. Euro sterling. A third bullish white soldier yesterday and a continuing follow on to the recent bullish piercing line pattern. Perhaps the most important feature was the close over the close line of the April 2020 low at 86.69, from which resistance had previously hung. Below, and interestingly, the support from earlier this week is the rising short moving average, currently at 86.23. Meanwhile above, we have the highs of February and April at 87.12, 87.19 and 87.30, before the spectre dropping from above, the medium moving average, currently at 87.76. Overall, and with still a week and a bit to go, we still have the chance for a monthly key reversal for April. Prices need to close on the 30th of April either above 86.70 or below 85.10. Currently, we have moved into a possible monthly key reversal up right now. So far today, a small dip down to the April 2020 low at 86.69. Though at this time I am unsure as to whether it is an ammunition gathering exercise or a genuine attempt lower. US dollar against the Indian rupee. A bearish black crow yesterday, though not long enough to make the last 3 days a bearish evening star pattern. The market closed down well below the August 2020 high at 75.31 and was only halted upon approach to the rising late March today uptrend, currently at 74.74. We nevertheless still have above target X4 in the 75.80 area, the target for the double bottom formed over this year. Over the second halt at 75.53 area opened the way for one of two, possible maybe three scenarios. We may have a possible double top or an ascending triangle. Both acute and both formed over April. And finally, possibly an outside possibility right now of a bullish halfway hesitation pattern. It will depend if the previously mentioned uptrend will hold. So far today, a further drop, looking like a bearish opening Black Mariposa right now. The market has dropped down to test the uptrend. So far it has held firm, though we still have the rest of the day to go. US dollar against the Brazilian real. Okay, I suppose I'd better start labeling potential targets now, as yesterday was a bearish opening long Black Mariposa that opened and closed below the recent sideways triangle. This could still be a false break lower. After all, the drop in March halted about where we had yesterday's low and close, the 545 even area. The reason this happened at that time was because it was, and still is, the 50% or recent 50% Fibonacci line at 544.41. However, this time that is not all. We now also have the support of both the medium moving average, currently 543.94, and the long moving average, currently 543.98. May I also point out that we are ever so close to having them form a golden cross as well. So, all this being said, I still feel obliged to indicate potential levels below. An initial target X would be in the 541.15 area. Not that much of an ask, you'd think, but we may have, as I have already discussed, some significant support out there. A full target X1 would be in the 513.80 area. Make of that what you will. I am just telling you what I see. Just remember, 6 out of 10 times the break on sideways triangles is on the upside. Additionally, being so far along the triangle, we have a high degree, as I've already mentioned, of false breaks and also pullbacks as well, something like 60 to 70% of the time. So please watch carefully. US dollar against the Mexican peso. Yesterday was an immediate countering bullish harami, though only just, which could also be seen as a possible indecisive spinning top. Yes, it is all getting a bit complicated now, as the market challenges the important early March to date downtrend, currently at 198288. Yesterday was the first close above it. However, it is worth noting where this original bearishness came from and why we seem to be slowing, or at least altering the speed of descent. To recap once again, the recent bearishness was a continuation of an idea I raised 2 weeks ago of, and I quote, "Recent action also leaves the way open for a possible descending wedge, descending triangle, or even a double bottom pattern." End of quote. We've already achieved the descending wedge target. What we now have are two possible head and shoulder tops, one from mid-January to late March, and the other from late February to early April. In the first case, we have an initial target X3 in the 1971.70 area, a full target X4 down in the 19 even area. In the second case, we have an initial target X1 in the 19.5 area, for a full target X2 down in the 1885.5 area. This only leaves the idea of a possible double bottom. This is in part the market now approaching about target X3. However, the idea of a double bottom will depend on target X1 holding, or at any point between where we are now and target X1. I've repeatedly stated in recent days all these lower targets, depending on the market, not breaking the steep early March to date downtrend. Denting it is fine, maybe realigning it to a shallower angle would be good, but the essence has to be maintained if the bearish scenarios come to be true. That is what needs to be looked out for. So far today, we're outside the downtrend, but the market seems unsure. This is a mirror of the indecision we have seen in recent days, questioning the strength of the move lower and its ability to continue as prices approach target X3. Thank you for listening. The short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.